Rock and roll, everyone. Welcome. I'm going to do a live stream today. I just figured I'd do it today since the market's closed, and then I will not be doing one tomorrow. So that'll just free up my Saturday. And the market's closed today, so whenever the market's closed, I can do these live streams, and I don't have to focus on the charts and the market. Again, I actively trade, so if I'm putting my focus off the markets and doing a live stream, then might miss some opportunities. So again, we're going to do the live stream today, and we are going to go through individual stock picks or subscriber stock charts. Anything you guys want me to look at or kind of talk through, happy to do it. And we will, just spend some time digging around looking for trade ideas for next week. Let me know if the audio is all right. We'll give it just a couple minutes to let a couple folks come in. Probably going to be less people today just because, I'm doing this live stream on Friday and I typically do them on Saturday morning. So I'm sure many people aren't expecting it. But then again, maybe this gives an opportunity for some folks who can't usually make the Saturday morning live streams an opportunity to jump in since I'm doing it on a different time. So let me know how that audio is doing, and we will get into these charts here pretty quick. The market, we closed down on Friday. Again, I talked about in my video how I was looking for a gap fill on some of the charts, and we did get that gap fill on IWM, so I pointed that out in the video. I just repiled back into my shorts. Again, that's active trading stuff. I try to give a mix of some active trading stuff for anybody who does actively trade and looking for little bounces here and there. But on the videos, I typically am really more focused on the longer term, swing trades, things that are going to play out in the weeks to months kind of deal. Because I can't always give you guys active levels that, by the time I get the video out, maybe the trade's already played out. Things move quick, especially when you have, corrective kind of, the market's in correction mode right now, bear market mode, whatever you want to call it. So the market moves quick in this kind of mode. So that's why for active trading, you got to really be on point. And my videos are just, the format isn't that great for giving you guys the best things. But, if I see like a little bounce coming and I think it's going to last a couple days, I'll get the video out there, let you guys know where I think it's bouncing to. And then where, typically I'll tell you exactly the level I'm looking to re-short at. And as we bounce into that level, you have to watch the market. But depending on, what that looks like, maybe I'll take the short a little early. But usually I'm looking for something close to those levels. So, and, oftentimes what I'll do, if something's playing out or if I see a trade idea that's triggering really in the moment, then I'll just throw it in a comment in my last video. So if I put out a video and something triggers throughout the day, I'll just drop a comment in that video as a way to notify everyone. My comments, I think, hover at the very top. So, hopefully that comment is there for people to see when I see trade ideas that are triggering. All right, so we're going to get into the charts today. Drop me a thumbs up if you guys are, don't give me a thumbs up if you don't find value, but, hopefully you're finding some value, catching some winning trades as we go along. SPY here on the SPY chart. This is a weekly chart here because we closed the week yesterday, so the big takeaway is you've got a bounce above the 200-day, a failure, another test above the 200-day, a failure. All right, so definitely choppy, but 2 failures, 2 rejections of the 200-day moving average. So maybe that's all she wrote. Maybe we don't get another test and we just head down now. On the SPY, this is a solid target. Like if you look at the SPY for 2020, it just really on the weekly chart just kind of went up. And if we take out these recent lows that we've seen, use the daily chart for your more accurate entries and triggers. But if you take out the recent lows on that daily chart, I could easily see us heading down to 338. That's your pre-COVID highs right here. So this is basically, this is where the market was at before the Fed went crazy. All right. They were still pretty crazy. You know, they were definitely money pumping and keeping interest rates low. But this is where the market was at before they did all of that money pumping. So it would make sense that you're going to, you know, hold some relative support down there. And it's probably going to be a multi-month kind of support, or maybe even the bottom, you know, the complete bottom. I don't know. From the high to the low, if we do get down there, the SPY will be down 30%. So that's definitely a bear market. I would imagine that the Fed would not be too happy, or would be starting to step back in or easing off their hawkishness if we get down there. All right. If the Fed doesn't ease off the hawkishness and you're down here, you know, really bad things are going to happen. I just don't see that happening. I see the Fed probably saying, okay, we got the correction or the bear market that we needed to hopefully take some pressure off inflation, and now we'll ease back. All right. So that's what I'm looking for, is the Fed to walk the market down. And by walk, you know, I mean, we could just crash straight down there, but I just don't see us going much below that without the Fed pivoting. All right. That's fundamental stuff, but there's your weekly chart. On the daily, you know, not much, just kind of chop zone. You can see down, down, up, down. All right. So not much there. If you look at the hourly on the SPY, the gap fill on this one, yeah, it was right about here. And we might still get that, but there's your first gap. This is the only gap on SPY, actually. This gap right here, it was filled right there. So the only gap would be right up there at 446.65. So if you see Monday, it opens and rallies, or you gap up or anything like that, I would look for that level to be probably the end of what this thing's going to rally at. And I don't know which way it's going to go. I don't think we're actually going to gap fill, to be honest, but we'll see. IWM, this is small caps. This one did gap fill. I'm looking at the hourly chart here. Well, actually, let's go to the weekly real quick. Cover the bigger picture stuff. Weekly, big topping pattern, okay? That topping pattern came with negative divergence. I have to redraw this because I keep moving it for different time frames. But there, see the momentum on the weekly just dropping off as this was popping. This little high right here was a divergent high. So you made a new higher high in price while momentum was just downtrending. So that was a kind of an indication that, oh, this is not a breakout, or likelihood it was going to be a fake out. Sure enough, big sell signal too. Look at that big red candle. As it breaks that key level of support, 209, boom, big red selling candle. And all we've done over the last few weeks is, and I got to clean my chart up on the weekly because you just kind of chop around, consolidate, rally back up to resistance, boom, big rejection, all right? And this week, you know, just trading down near the lows, closing down near the lows. So I'm seeing more downside. Again, watch for the lows to get taken out right now, and they're about 188. Those get taken out, and use the daily, you know, or even the hourly, but I'm looking for when that level gets taken out, it should be lights out right down to about 173, 170 zone of support. Okay, again, that's your pre-COVID highs right there. All right, so there's your pre-COVID highs. And also it kind of held that right here in 2018 as well. Big support for IWM down at that level. I'm thinking we're heading down there. I'd say a high probability. You know, it definitely looks like it's a green light to get down there. So I'll probably add to my short on a break below here for that move down there. And where we're at right now, it's still another 12, 13% to the downside. It's a good amount for an indice. So I like it. Looks good. On the daily's nothing. There's nothing really going on here on the daily. Maybe a back test for a rally back up, but I don't know. This trend line's not really my favorite. I think what happens is we have a downtrend. We had a little counter trend bounce over the last, early part of March and then, or mid-March or whatever. And now we break and resume down. All right. That's what I think happens. All right, so I'm watching for that. And then on the hourly chart for IWM, we did gap fill. So there's the gap, the only gap, 202.60, and there's your gap fill right there. It basically within pennies, so that's your gap fill. So I like that. When it did that, I was like, all right, back in short, let's rock and roll. And I don't see any real if it rallies again, I'm not gonna pull off my short. All right. So if it wants to rally up and do another test, fine, I'll just let it. I don't think it's going to happen, but at the end of the day, what I think will happen is we're trading lower down to that 173, 170 area. And then we'll look to probably cover our shorts down there. Qs. All right, there's your tech sector. We'll go to the weekly here. All right, the weeklies get messy because I'm in there on the hourlies and the let's hide the trend lines for right now. The big thing is on the weekly, look, tested the 200, fail, tested the 200, fail. All right. It won't let me, but there's the 200, failed again. Pretty impulsive selling, 2 strong weeks. All right. So clear rejection. To me, this just looks like a start of a downtrend. Going down, counter trend rally, resume the downtrend. So, yeah, we could probably even mark out something like this and do like a bear flag, and maybe it's projecting our target down to about 297. All right, 300, 297, right in there. Looks like the next at least target. And when I measure that and look at the, look, you've got resistance through here, and then it was support. So look, you got a level right there to watch. Good probability we get down there within the next couple weeks. Probably not going to happen in a single week, but it might. The thing is, if you start seeing really impulsive selling in a short time frame, and again, this is a weekly chart, so let's say we see 1 to 2 weeks of pretty strong selling, then you're going to have a washout move. Volume will pick up. Everybody's going to, throw in the towel, and that might mean a near-term bottom or even a long-term bottom. So if you're bullish this market, you actually, the sooner that impulsive selling comes, the better, I guess, from a perspective of this, that's usually going to be the signal a near-term bottom, but, obviously you take on a bunch of losses. So I'm short this thing, riding it down. It looks good. Looking at the daily, we closed near the lows right there. On the hourly, I'm looking to take out these most recent lows. I want to see it head down to this 318.60 and then take that out. All right, we take that out, and it'll probably come in the form of a gap down, to be honest. But if we take that out, let's say we gap down, and it'll probably just sell off really impulsive right down to that 300 target. So that is the area and the price action that I'm looking to play out. And yeah, I don't see any difference. I don't see anything else going on, really. Look at the PPO right here. This is the hourly chart, but you see this as I zoom in. Bearish crossover. All right, right there. So, it just signals that I think there's some more downside. I think we're heading down to this 318. You'll probably get a bounce here. They're going to battle it out down here. So probably battle for a few days, and then, maybe you get that gap down. The gap down would be a sell signal. All right, so I'm short down to here. We'll see how it plays out. Maybe I'll cover it. Maybe I won't. And then if you get that gap down, that would be your next sell signal. Again, we have to see what the chart looks like if or when we get down there. All right, so let's get into your subscriber stock picks. Guys, drop me a thumbs up as I go along. I do appreciate that. And if you're new and you haven't taken the course already, I would recommend doing that. There's a lot of knowledge that's been congested into a 4 to 5 hour training course that will really help you. It'll act as these videos should be supplemental to your trading skills and your knowledge base. So again, that course will speed that up. We'll speed that learning process up. You'll see things in the charts that you didn't used to really pick up on because you took the course. You'll pick those things up, and you'll start to be able to pick out your own trade ideas. Okay, and the link is in the description below on that. All right, let's get into these charts, guys. Pure gold mining. That one, yeah, I'm not going to do that one. It's too much of a penny stock, speculative, just not my cup of tea for the most part. Uranium sector. Yeah, I know uranium's like going parabolic. I've heard about that. We can look at that. I've heard it's doing well. I guess this one's not really parabolic. Negative divergence showing up right here. Just starting to show up. Again, divergence is not a reason to get out. It's not saying, oh, okay, time to short. It's just saying, okay, there's some conditions here that says there might be a short. But look, you got this PPO crossover right here. So that's, that's not really a good trend line. I don't like that one. Yeah, there's the trend line. I just take this sucker right here, probably try to match it up as best you can with something like that and just call it bullish. Definitely negative divergence. So it's and it's on the weekly as well. You see the weekly here. See that negative divergence. So, look, I'd probably stay long this, but keep an eye out. If you break a trend line, this to me looks like a good trend line on the weekly. But you start breaking that, maybe on an impulsive daily breakdown, that might be your sell signal to exit on this thing. So it can continue to rally, but keep an eye out for that sell signal. And again, I wouldn't short it. Commodities, I'm not really interested in shorting commodities in this environment. These things could run, but they're probably due for a pullback, I suspect. All right, LEU. See what we got going on here with this sucker. Let me get back down to the daily. Again, the weekly is just kind of bigger analysis. The daily is more tactical for trading, which is my favorite to trade on. That, yeah, see, I don't like that. This thing's just been riding the 200-day. I can't make a clean trend line on it, to be honest. You gotta let me zoom in here and see what's going on right here. Yeah, I can't make the cleanest trend line. Maybe a sell signal and a back test here. Could probably roll it up like that. But then you got all these kind of whips through there. Probably do something like, let's see here. Something like this. Maybe that. That's probably about as accurate as I can get on that. Support. There's a tag there. Support. Yeah, that one's good, I guess. You did have a whipsaw, bear trap. Those show up sometimes. And a sell signal. Are we due for a bear market rally? Let's take a look. Yeah, I'd say it's probably due. Just because, look, you've got, or maybe not even a bear market rally, but look, you've got bullish divergence here on the hourly. So you made a little new low. That's a divergent low right there. I just mark out. This is pretty thinly traded, guys, so it's not, not usually the best, but probably do something like that. Call it something like that, maybe. You're right at resistance. What I would do is wait for an impulsive hourly break above, and then you're probably going to run up to the 200 or even a back test of the trend line. If I was long this thing, I'd probably take it at the 200, or maybe you could hold a little bit, hold out for a full back test. All right, but that's what I'd look for. All right, so I did the. Yeah, okay, so TOT, yeah, I've been looking at this one. So TNX is kind of the interest rates. And, if you look at the monthly, I just look at this, right? And this is your 1981. So here's basically your interest rates dropping since the early 80s, and this is the reason why everyone alive today says buy for the long hold, or buy for the long term. Stocks always come back, and that's because since the 80s, interest rates have been falling. Every single time there's a recession, they drop interest rates. They stimulate the market, but it's been getting worse and worse. They've been running out of weapons, since 2000. All right, they had to drop interest rates way below the trend and then start pumping QE. And then in COVID, they didn't have much interest rates and they had to do a ton of QE. Now you have massive inflation and no interest rates. So they literally have like no weapons to fight recession right now. So except for job owning, and expectations. So they're literally trying to probably bring the market down so they can get some interest rates back, scare people into bonds, right? That's what they want to do. Bring markets down a little bit, scare people into bonds, interest rates, get some of this pressure off. So they're going to raise interest rates to get their weapons back, and then they'll drop those interest rates in the future. But yeah, there you are, right at what I can see is kind of key resistance, and we'll see. That should be the top of this nearest spike, and then we're probably gonna, have a pullback eventually. In the future, I don't know how long, because this is a monthly chart, so it could be a year or two, or who knows. But I suspect maybe you pull back, and then I think in the future you're gonna break this and start a new bull market in interest rates. Maybe it's sooner than later. Maybe we break it right now, but that's what I got right now. And then TLT is basically the inverse. You can just draw that out. We're kind of at support, basically. Something like that. Slightly below, actually. This one doesn't measure up quite as nicely as that TNX, but we're basically at that. And it's a monthly. This is a monthly chart where, halfway through the month, so buyers might step in, and it will recover that support line. Looking at the weekly, yeah, something like that. So, yeah, I don't know. Maybe that is a break. I'm not interested in buying the bonds. I'm not going long on bonds. First off, they don't trade. It doesn't move that much, so I'd rather just look for shorting, things like that, or going long stocks. But yeah, we'll watch. We'll see how if interest rates keep rising too much more, the market's going to start breaking. You're going to get that impulsive breakdown in the tech sector and the general market. The market can't handle higher interest rates, and especially at the rate that they're ascending. So any higher, if they keep going, you're going to see that breakdown in the market. We're going to go into recession, and that will take some pressure off the interest rates as people flood into bonds. Yep, Ronnie, I did fix the double mic problem. All right, moving on, guys. Semiconductor EFF. Well, I don't know which one you're talking about, but I usually look at the SOXX, and we'll go to the daily. Yeah, you got some bullish divergence. Here's what someone that said there's bullish divergence on the, yeah, there is a little bit right there. It's not confirmed. Look, here was all right, this is where the initial bullish divergence showed up right here, okay? So this low, and you got the rally, okay? So I think that pretty much played out. Now, recently, we were coming down, we're making a new low, but at the end of the day, we already got a rally out of the bullish divergence, and when I look at this, I see, look, and as I zoom in on the RSI, pointed straight down, all right, little bounce, but pointed down at closing the week down, and then on the PPO, pointed straight down. So, and then price closing at the low. If you just get that big move down right now, you're going to burn through those divergences. It's going to look like that. So that's why we don't use divergence as just the only indication that there's going to be a rally. And I would lean this way. All right, I would lean towards down here. All right, so you get the big move down here, then you're probably going to burn through these divergences, hit the support, and then we'll see. We'll see what kind of plays out. Maybe what it'll do is come down here, burn through the divergence, kind of chop around, start to go lower, put in bullish divergence, and then you get a rally. I don't know. I'm leaning towards more downside. Moving on. Yeah, silver. Okay, yeah. I like silver. Silver looks good to me. I mean, I like the miners, PAAS. Look at that. I mean, I don't see any indication. The only thing I don't like about it is the slight divergence. All right, we've got divergence on the PPO, but look at the RSI. Let me zoom in. Look at that. You know, all right, we could call that a divergence. It's an equal high, and yet we made a higher high in price. So yeah, we have negative divergence in this miner, and we have it on the GDX. But you look at the PPO, look, we're crossing up, pointing straight up. So I don't know. You know, I'm thinking maybe we burn through it. We have to watch. But in PAS, look, you've got this zone of, and this one's volatile because it's, these silver miners are volatile, but look, you kind of got this area of support right in here, and then it was kind of resistance right in here. So we're breaking above. We'll see. You know, we might be going up there. $40 roughly. And if we go there, you'll probably get a little pullback, maybe down to the middle of the range, and then probably off to new highs. It's all hypothetical. Earnings season. Well, the thing is I just use the charts. Someone asked how I'm playing earnings season. You know, I use the charts. Oftentimes the charts will tell us in advance where where something's going to go after earnings. And sometimes if you let's say you have a support line and you have a resistance line, usually earnings will get you to one of those levels. So sometimes you'll have a back test of resistance, which will actually give you will give you a good opportunity to maybe add to a short. It just depends on the setup of the chart. If the chart's set up bearish and you get a rally on earnings and it rallies into resistance, we want to short that. All right. That's usually a very good opportunity. And that's like, here's an example. All right, I'll just give you guys an example. Here's Google, right? And we're looking at a daily chart. All right, this is your last earnings here, right there. See it? I have it circled, but basically there's your earnings and there's your rally. All right, so Google came out with, the market basically rallied after earnings for whatever reason. If you went long and were bullish, if you owned it pre-earnings and the earnings came out and you didn't know what you were doing, were you selling on this day? It rallied up. You know, this was a strong rally. It rallied up at the highs. It went up almost 10%. So were you selling into that? Probably not. You know, maybe you were, but a lot of retail people, they bullish earnings and it's up 10%. They think off to the races. Everything's happy because at the end of the day, most retail traders, they are bullish and long when things are going up and they're happy, and when things are going down, they want to sell. All right. So this rallied strong, but in reality, this was a divergent high. See the negative divergence on the momentum right here? So as it spiked up and made a brand new high right here, it was a lower high in momentum right in here. Negative divergence. So that was very high probability that move to new highs was going to fail. And sure enough, there it is. So that, you know, you'd want to actually be selling on that earnings report, and it fell 20%, 17.5% from there. Okay. So, you know, I use the charts to tell me where things are likely going to go. As far as I can tell, this earnings season is going to bring us lower. All right. It's just the way the charts are set up. We had a big bullish trend, a topping pattern. Last earnings, we made a new high. This earnings, I think, brings us lower. All right. In these FANG stocks. So I'm looking at Google down to this level, about 1900. That's your long-term, going back to 2015 bull trend. Okay, X out COVID because that's kind of an outlier. That was a liquidity event. I'm looking for us to head down to this area. It's not going to happen all on earnings, but earnings might just be a catalyst to drop us down into the next trading range. So maybe we're doing this till earnings and then we gap down and head down. All right. That's what I got. And that's just an example. So that's how I'm playing earnings. I think we're going lower. In general, I think what will happen is they're going to come out and talk about inflation eating away at profits for the most part. They'll blame everything on inflation, but yeah, that's and they're probably gonna they're gonna forecast lower earnings in the future. NTR, is that Nutrien? Which one is that? Yes, it is. All right. Yeah, I actually own this one, I believe, in a different account, and negative divergence though. So look for maybe I don't own it. I don't know. I definitely was looking at it the other day. Negative divergence is in play. Not confirmed yet. So we need to see a confirmation. So what I'd want to see is like the RSI start to turn lower. This PPO it looks like it wants to roll up, but maybe to break down or whatever. But just look for confirmation. And then what you want to look for is a break of this trend line here on the daily chart. And I was trying to mark it out. It's honestly, yeah, it's something like right there. Tighten this up right in there, something like right in there. So look for a big impulsive breakdown of this trend line on the hourly. Until then, I'd stay long, but if you get the breakdown, that would be your sell signal. So you're probably going to get a sell signal here pretty soon. This thing's gone like parabolic, so I would think you're going to get a sell signal. It's probably going to come down to the 200-day moving average. Things to look for there. Could even come all the way down here. It just depends. Like, this thing's not going to come down. This is also part of the war thing with the natural gas and all that, because of the natural gas that is a key ingredient for making fertilizer. So this is part of that. But I think you're still going to get a sell signal here pretty soon. But again, I would if you're long, I'd stay long until you get that sell signal. Moving on. MCK, that's Merrick, right? That's a healthcare. Is that Merrick? Oh no, this is different. MCK. Okay, I don't know. Never looked at this one. What do these guys do? Distribution services, medical. Okay, so this is the healthcare play. Pretty much gone parabolic. Interesting. So this is a big rounding bottom, all right, and it's breaking out. So it's, the way you usually want to play these is you look for, there's kind of the top like that, and then you measure out the top of the kind of the cup or the rounding bottom down to the bottom, which, I don't know. We'll just kind of go in the area, and then you measure that breakout point, and that puts us up there at 5. We'll just call it 500 flat, all right, just to give you guys a rough target. So yeah, that is a measured target on the bigger time frame, and it's there on the weekly like that. So yeah, I'd say 500 basically. But let me look at the daily, see if there's anything going on in the short term. Look, see the momentum, bullish momentum, bullish momentum. RSI made a new high right here, so bullish momentum. All right, bullish momentum, bullish price action, bullish. 500, as far as I can tell. What I would do is just watch this trend line. It might not get to 500 in one swoop, but you can maybe watch something like this. Looks like it's kind of starting to trend, something like that on the daily. Support, support, support. There's another tag. Watch that trend line. If negative divergence starts to show up, and you break the trend line, then maybe you're going to pull back and have some sort of correction before you get up to 500. But, or maybe you come all the way back to this support line. That would be a buy zone. 245 would be my buy zone. If I don't own this, which I don't even know if I do, but if I don't, I'd want to buy it here. Otherwise, yeah, it's probably going to about that 500 area as a projected target. Does this pay a dividend? Small. Okay, there's that one. All right, guys, drop me a thumbs up if you haven't done so already. Also, if you're new, check out my stock market technical analysis course. That is there for you guys. I'm not giving it away for free. My time's not free, but I did price it appropriately and affordable for anybody that's either new into stocks or just don't have this trading style as part of your skill set. I like this trading style, to be honest. It works really well for me, so. Okay, let's move on. Sorry, guys. Clicked the button on accident. All right, I'm just kind of... Yep, Tesla earnings. I think they're going lower on earnings, to be honest. But I could be wrong. Yes, TLT is at long-term support trend line. I agree. Jake says that. I agree. And TNX looks like it's at long-term resistance. So I don't expect it to just break. Like, I don't think interest rates are going to go too much higher from here, at least in the short term. Maybe we get a pullback in interest rates, which could be a transition, like a fear trade. We might see the market crash a little bit and people rush into bonds. All right, buy bonds, interest rates will drop. All right, that could be the play that's going to play out here relatively shortly. And that kind of is on par with what I think is going to happen in terms of the markets coming down to those next key levels of support that I've been looking for. So that's why I'm short the markets. Mara. Yeah. All right, Mara, sorry, I'm just trying to sift through these. What's UL? Let me look at that one. Unilever. This is going to be a defensive stock. I've charted this. In the past. Yeah, it looks like a bear market to me in Unilever. Something like that. Break trend. Break 10, back test, down she goes. That's impulsive right there. That's a big sell signal. So this one looks like it's going lower. Yeah, they might, you got some support right in, the COVID lows are right there. Look, you're down at the COVID lows. That's bearish to be all the way down there. You got some support. This is the weekly chart. So again, I would go to the daily to find better levels. Right in there. I like it down there. 38, 39. That's a good level of support. So that's where I think it's heading. All right. Probably pretty soon too. And yeah, maybe you want to buy it down there. Dividend would be good. It's 4% right now. Maybe down there it's better. But then they might cut the dividend. You never know. So, but yeah, I think lower. If I look at the daily here. Yeah, you don't have bullish divergence either on the daily. I mean, look, you've got bullish momentum in the short term, bullish price action. So this, as it heads lower, the momentum's likely to go lower too. All right, so that's what I got on that one. And then XLF, did that break 37 on Friday? It did. So we broke 37. That's a key level, all right? Now, it probably broke it at the end of the day towards the end of the day. But it did break it. So probably lower. I think we're due for that move down to our profit targets in the markets. I'm seeing breaks of lots of things going on. So let's look at XLV. Real quick. XLF to me, probably down to 35. Yeah, 35-ish. And maybe down to this level down here it's about 35 to 34, right in there, but that's zone of support. And then let's look at XLV. Look, I mean, it's sold off. It's still kind of hanging in there. I want to see this one start to get weak. We start seeing weakness in this, weakness across the board, and people buying bonds. That's going to be that's our tell that we're going lower most likely. All right. How to use volume bar and price action. Well, look, take my course. All right. I talk about volume and how to use volume in my course. All right. So I'm not gonna break down the course in these live streams. All right. RTX. What's this one? RTX. Raytheon. This is a defensive play. So this is going to be probably a lot based on the war kind of crap. But still bullish regardless, you know. This is a value play. All right, there's your lows. There it is, right in there. Right about there. All right. COVID lows. Support. Yeah, right in there. So bullish trend. Starting with some, you know, there is some negative divergence right in here. All right, just starting. Not confirmed yet. All right, so here's how I'd play this. All right, you got some bullish divergence. You've got some negative divergence, not fully confirmed. You've got a bullish trend. I would just stay long this thing. Although you might, with this divergence right here, maybe you get a pullback to the trend line relatively soon. That is a 10% drop. If you want to zero in on like the hourly chart, you've got this hourly trend that's going on right here. And on the hourly, got to zoom in. There's your, you know, start negative divergence just showing up on the PPO and on the RSI, just showing up. You got an hourly trend. You get an hourly break right here, then maybe that sets us in motion for a move down to the major trend line. That's where you buy it at, and unless you break that major trend line, this thing longer term should continue higher. You know, and then here's your COVID highs, so maybe that's something to watch. All right, so very, very, very short term, maybe you get the breakdown and head down here. Medium to long term bullish. That's how I'd break that one down. All right, and AMR. I'm going to run for about another 5-10 minutes, guys, and then I'm going to wrap up. AMR. Well, we don't know what this is. Is this a healthcare one? Metallurgical. So this is a resource play. Coal. Okay. Energy play. Natural resources. Inflation trade basically is what's going on here. This thing's crazy. You buy this thing down at $2, man. It's gone. I mean, so this is a log scale, which usually, you know, kind of wipes away the parabolic moves, but this thing's still almost parabolic where it's even difficult to really draw a clean trend line. So, you know, if I take the log scale off, parabolic. Usually when things go parabolic, they're going to come down. Look, you got a bull flag kind of thing going on, so maybe, you know, I don't know. I just set a trailing stop. Look at the hourly chart. Maybe you just, you know, ride the hourly. You get some sort of a big breakdown. You'll see it. It'll show up with like a big gap down. You get that, you know, I'd probably exit. Otherwise, just trailing stop it. You know, you probably have to set it relatively wide as well, but I don't know. You know, this is a momentum play. I'm not a momentum trader, you know, so I buy things when nobody wants them, when they're just starting to turn, and then I typically sell them when everybody wants them. You see the weekly, you've got negative divergence, not fully confirmed yet, but definitely a negative divergence right now. You know, you've got a higher high. Momentum's not a new higher high, so look for that breakdown, maybe a gap down, something like that. Trailing stops. All right, Shopify. This one's been bombed out, I'm sure. Yep. All right, I got to get back into my log scaling. All right, bear market down here. That's your next support area. It's kind of a zone. We'll call it a zone because you did have a little reaction right here. That's where I think you're going. and that's about 307 down to about 285. Yeah. So you probably get a bear market rally down there, but I think you're going to head down, then you probably get a rally. All right, and where's that rally go? I don't know. We'll have to look, but that would be my target for right now. And look, on the daily, look, you have... There was your bullish divergence on the RSI, and you got the rally out of it, so I think she's done, heading lower. Mosaic. Well, that one's going to be pretty strong too, I'm sure. CHGG. Well, let's look. Okay, well, you should have gotten out of it a long time ago. Someone says they've been holding it. Well, I don't know how long you've been holding it. You know, if you bought it after this gap down, maybe. But here's your bull trend going back to 2016. There's COVID, so we have to kind of X that out. And this is where your sell signal was right up here. So you want to get out up there. And then, you know, but there's your trap. You know, that's an earnings, but that's a bull trap. You know, if you didn't get out here, they've trapped you. So I don't know if you're short or long, if you've been holding it. I don't know. I suspect you're long because shorts don't typically hold shorts for too long. You know, the downside happens a lot faster, so you're usually not short for as long as you're on this one. Bullish divergent low right here. That's a divergent low. So you've got bullish divergence. You are rallying, all right, from that low. This was a downtrend, breakout, back test. So it's a bullish trend right now. And I would just, well, yeah. As far as I can tell, that's the end of the of this rally. All right, this bull market rally. If you look at the hourly, I suspect there's some negative divergence showing up. Yeah, see that right there? Negative divergence. See how the momentum's just dropping off, and while price is just kind of ticking higher. All right, and then break. All right, sell signal. All right, the hourly one right there, that was a sell signal. So that's probably the end of this bear market rally, and you're heading lower. All right, that's what I would say. Moving on. All right, guys, I'm gonna do one more and then wrap up. Yeah, I don't do the Wyckoff bottom stuff. Everybody's talking Wyckoff tops, Wyckoff bottoms. I don't need it. My strategy works. It works for me at least. Take my course. It should work for you. My active trading account is up, I don't know, 60, 70% so far this year, and we're just into March. And then my other trading account, which is more of an inflation account, is up as well. So up all around the board while the S&P 500 is down. So let me just find one more, guys. Just looking for something interesting. Costco maybe is interesting. We could look at Costco. Looks like a short to me. Yeah. So I know everything looks like a short to me. I'm sure that's what everybody thinks. But the reality is that we've had a very strong rally from 2020 to 2021. And it, you know, as far as I can tell, it looks like we're heading into a bear market. So it makes sense that a lot of stocks will look like a short. Now, a lot of the speculative stocks have already been sold off really hard. So some of those I wouldn't be interested in shorting. But the strong ones, the strong stocks, they're always the last to go. You know, Apple, things like that. If you're going to go into a bear market, they're going down too, and they're always the last to go because people hide out towards the end, they hide out in strength. So, and Costco's no different, you know. So here's, you know, looks like a a bullish trend. You did get a sell signal right there for sure. And if you took that sell signal, it was profitable. Down at the lows, we started building bullish divergence a little bit, and then it's just been back testing. So back test, pop above, failure. I don't know. I think it's probably worth a short right up here, in my opinion. This is, and you're close enough to the key level where it's low risk. Looking at the hourly chart here, you've got the negative divergence there in the RSI on the hourly. That's a divergent high, but it wasn't a divergent high on the PPO. So kind of mixed signals. I don't know. It's not something that I'm interested in shorting, to be honest. It's not going to move a whole lot. It's paying a dividend, probably pretty weak right now, 0.5%. But, I think it's probably due to come down. I can't make that. Something like that, possibly. If you benefit of the doubt, maybe you'd mark this trend line out. You have a couple reactions there. And if you break that on an hourly close, nice impulsive hourly close, not just a little dip below and a hold. You want to see a nice red candle there. That would give you maybe a sell signal and could be the start of a longer term downtrend in Costco. Costco can go down as well. Don't worry. Costco can go down. If the market's coming down, these strong ones are coming down as well. Look, longer term bull market on Costco, looking at the weekly chart. Here's your 2009 low. So here's your kind of your what do they call it? Your return to the mean or whatever. Costco can, and here's your COVID pump. This is all the money printing and everything. So this goes into a bear market. We could easily come all the way down here and still hold a longer term bull trend. All right. It just shows you how far away the markets, how out of bounds the markets have gotten in the last couple of years due to the Fed. So that's what I'd look for. On the hourly, maybe look at that breakdown. That might be the start. We might be at the top, basically. Can't say for sure yet, but looks like we're probably getting close. Look for those breakdowns in the hourly and manage the trade. You get the breakdown, you could take a position or maybe exit. And if the chart changes, if it continues to trend down, then you're right. If it recovers the trend line and still, starts recovering, you're taking positions at key levels, so you're not that far off. So you're small risk. And if you're right to the downside, then, could be all the way down here. And that would be a move of 40, 50% just to bring us to the long-term bull trend. All right. That's all I got, guys. So check out the course, link in the description below. Drop me a thumbs up on your way out, and I'll see you guys on Monday. No live stream on Saturday. I just did it today. So I'll see you guys on Monday. Good luck. Have a good weekend.